welcome to Ventures and Visionaries, Episode 5, Building a Resilient Organization. I'm your host, Morty Hackle. I'm an entrepreneur, business founder, strategic consultant, people developer, and problem solver. I love people, business, and technology. This podcast is about how those areas intersect, contrast, complement, and multiply each other. Today, my guest is David Acharya. David Acharya is from Acharya Capital Partners, or ACP, a New York City-based private equity firm that buys, builds, and enhances lower middle market companies. David is focused on discipline, focus, and experience as a key differentiators for ACP. Welcome, David. How are you today?
Thank you, Marty. Thank you. Looking forward to a very productive and fun conversation.
Absolutely. Maybe tell us a little bit about yourself, how you got into private capital and the PE investment journey for you. And then we'll talk a little bit about that for all those people who don't know what private equity is. We'll give a little bit of background on that as well.
Sure. So I was born and raised in New York City. And about the time I was picking out colleges, so this was late 80s, Wall Street went through a very transformational process. And it was this area where, if you didn't grow up in the right families, you never necessarily broke in. But because of the Reagan boom of the time, Wall Street attracted a broad range of people from various backgrounds. And when I was picking majors, finance really stood out as as something where I can make a living. I was also very fortunate that when I graduated from junior high, I got a handful of shares in some small company called Microsoft at that time.
Yes. If you're talking about when, the 80s?
Yes, yes. And if you ever wonder whatever happened to them, they just grew.
Please tell me you
They
held
just
on.
grew. I held on. The relative that gave me those shares is my favorite relative. He knows it, and everybody else in the
That is
family knows
hilarious. What a great story.
Yeah, and just tracking the share price and what made it go up and what made it go down was very interesting to me. And at in the late 80s, there was an investment bank called Drexel Berman, and they were on the front page for all the good things, and then unfortunately for all the bad things. And it interested me as to how capital was brought to companies and how industries grew. And I realized to be part of that process, I had to go to Wall Street. So majored in finance, got a job at a bank called Chase Manhattan Bank. Now the world knows it as JP Morgan, and became an investment banker and spent probably the next 10 years of my life with doing investment banking, first at Chase and then at a firm called TD Securities, which was the U.S. investment bank of Toronto Dominion Bank. Had a lot of fun, would work long hours, and had the ability to travel, had the privilege of doing deals on 6 continents, and still looking for that one deal in Antarctica, and then I think I could be
Good
done.
luck. Good luck. Is there any business in Antarctica? I mean, I don't know, the penguins buy and sell futures of something?
I'm surprised there isn't any.
Maybe soon.
But having said all that, as I was climbing the ladder in investment banking, you go from the things that attracted you to the business to go to managing people and deal teams. And I started getting very interested in the private equity world. So my generation of bankers, they either went to hedge funds or they went into private equity. And while I do respect hedge funds and people who've gone there, and quite frankly, I thought I could even had a great career. The reason I gravitated towards private equity, I also came from a family of entrepreneurs, and private equity was probably the only part of the world of what we call the buy side, where I can still quote unquote do deals, but at the same time work with how to run a business, how to manage a business, and private equity gave me that. So I joined a former client at a firm called Apprise Media, and we had backing from an LP to go out and buy media properties. Like a lot of funds at that time, we were extremely profitable, made a lot of money for our investors. But when we tried to raise fund two, Bear Stearns just failed, and the world of private equity
So
has
this is
changed.
around
Uh,
2007, 2008.
Exactly. And I joined a former colleague of mine from the old Chase Manhattan Bank, but very unique funding strategy. Rather than having a committed fund up front, they decided to do something on a deal by deal basis. And the term at that time was called fundless sponsor. Now, Morty, if you can give me two words in finance that are an oxymoron, it's to use the word sponsor and fundless, in the same
Okay.
phrase. But and it was also the wild wild west of private equity. And within a short period of time, I've achieved some success. I had a very successful closed deal. At the same time, I started seeing trends in family office investing and wanted to be part of a firm that took advantage of those trends. So made the move to another firm where I came in as a partner, as an investor. A group of us did a number of platforms with the backing of family offices and institutional capital, and we achieved some pretty good success and made a lot of money for our investors. In late 2019, my partners and we had I wouldn't call it a divorce, but kind of I wanted to do private equity. One of the partners wanted to go run a company, and another partner wanted to go focus on early stage investing. And went our separate ways, albeit we're still friendly with each other. We still talk to each other. We still bounce ideas off of each other. And I founded Acharya Capital Partners. It was my sign to start my own firm, and ironically, it was my investors who gave me the biggest push. When you start an organization, people think you have a lot of self confidence, but there's also a lot of doubt. Is this going to work? Is this going to fail? But the fact that people who've written me checks in the past convinced me to do this, I thought it was my time to go out and start my own firm. I still had some obligations for my previous firm, so I managed two of our former portfolio companies till exit. Was a spectacular success for our investors, and gave me an opportunity to manage these portfolio companies on my own. And we had a very successful exit company called Impact XM and On Location. We sold it to a great middle market a private equity firm called Riverside Partners, and our co-investor in the deal was a great mezzanine equity firm out of Detroit called Peninsula Capital. So all in, it was, I would say, a great case study for what a successful investment
So
is. And now looking for new platform investment.
So we're going to talk about what a platform investment is in a moment for all of our people who don't know what that is. But since you started your own business, I think you said about 5, 6 years ago, roughly. So I think back to when I started my company, and there are many, 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 many lessons that have been learned over the years. Can you share a lesson or two that anyone who's thinking about starting their own business should know and be aware of and accommodate for?
Sure. When you are part of a group, a larger organization, Morty, there's a lot of things that you have other departments to do for you. But when you're on your own, you have to roll up your sleeves and sometimes get a little dirty in areas that you never really had to do before. For example, website design. Okay, coming up with business cards. To confer with leading investment bankers, fellow private equity firms, and portfolio companies and CEOs. on strategic issues and financing issues. And then suddenly you're on the phone with your website designer and say, hey, make that a little gray, expand that line. I think as entrepreneurs, you have to roll up your sleeves for the first few years. You don't necessarily have the budget. You don't necessarily have the resources of a large organization, so you have to do that yourself. And so I think when you go out there on your own, be prepared to do some of the things that you normally never had to do when you were part of a large organization by yourself. And that transition is a little hard for a lot of people.
So it sounds like what you're advising people to do is be open, be flexible, and be accommodating of things that you would normally think were not my job, so to speak, but now are
Exactly.
a good way for you to enhance your general knowledge. Perhaps maintain a positive attitude as well.
Yes, because when you own your own firm, or and I'm sure you can certainly attest to this, when something goes wrong in a large organization, you can always look above the ladder. But in your own organization, you are the ladder. The buck stops with you. I named my firm just using my last name, and it's very important for me to tell portfolio companies when somebody invests in you, I have to go to investors and take that responsibility of finding good investments and hopefully growing that, the growing the value in whatever companies we invest in. And I think it's important to know that by putting your own name on the front door, you're telling the marketplace, I'm taking responsibility for the trust that you put in me in managing your money. And when I deal with portfolio companies, they know they're not dealing with XYZ associates. They're not dealing with outdoor associates. They're dealing with Acharya Capital Partners, and my name is on the on the front door. So I think it's very important that they know who they're dealing with, and they're dealing with somebody with a lot of experience. And that was the origins of the
I
name of the
love that.
firm.
I love that. Yeah. And, when I started my firm, I also named it after myself and my partner. So I hear that, your name's on the door, and therefore you own the outcomes for good and bad.
Yes,
And people come to
agreed.
trust you because you are the brand. But by the same token, when you're trying to scale a business, that becomes difficult as well. So maybe we talk about that and we'll jump ahead, so to speak, to the journey of a company that had a private equity investment made in it. Presumably that's done in order to be able to help that company succeed.
Great. We unlike the firms that you read in the Wall Street Journal, KKR, Blackstone, absolutely great firms, two firms who I respect and look up to. We actually focus on the lower end of the middle market. And these are companies with EBITDA of anywhere between $3 and $20 million. And we focus primarily on three industries: TMT, which is short for telecom media technology, business marketing services, and light manufacturing. Why those areas? Those are the three areas that I focused on my first day on the job as an investment banking analyst way back when, and stuck
So
to
you
those
have lots of
industries
experience
because
in that area.
a lot of experience, a lot of resources. Because when things go wrong at a portfolio company, you have to have the ability to bring some resources to the table as well as the
Hmm.
experience on how to handle it. What I see a lot in private equity is what I like to call the flavor of the week
Mm.
strategy. Suddenly they're focused on these companies because that's what you read about in the front of the page of the Wall Street Journal. A few years later, suddenly they change their strategy and like, well, let's focus on this. Whether it's good or bad, those are the three industries that I've been focused on since the first day of my career.
So,
And
yeah.
our investment philosophy is buy and build. So we look for a great platform company where we see a lot of promise that's led by a good leader. And then we supplement that growth through organic initiatives as well as complementary acquisitions.
And how does the PE firm, in your case, I know your approach is unique. How does a firm like yours differ in the interactions with the portfolio company slash companies, both in the acquisition phase as well as in the building phase up until said exit?
Yeah, so being a small firm, Morty, every investment is very important to us. You're not going to be one of 50 portfolio companies with my firm. We, given the size of the team, it's myself and an associate. We deliberately decided, okay, we're going to focus on a handful of companies, and those companies we are able to give a lot of attention to. We're not there day to day, but we do communicate with the company many times on strategic issues. And just given my background in M&A and financing, we typically take the lead in both the acquisition and the disposition of companies within our portfolio company. Because as you know, Marty, buying a business is a full-time job. And we want our CEOs and their teams to focus on the overall company and growing them. And I think the value add that we bring is first a lot of experience in during investment cycles of investing in that particular industry, as well as doing the heavy lifting on something that's very important but can take a lot of time suck out of a management team, which is the mergers and acquisitions
Sure, sure.
of the
And
platform.
you said that one of your areas of expertise is telecom and media. So,
Mhm. Yeah, it was really funny how I got involved. I was a first year analyst, and if you know anything about analysts back then and even now, hardest working people on Wall Street. 100,
holy cow.
hours, not a lot. Oh yeah, it's I think I probably slept in the office twice a week for probably throughout the
Holy
90s.
Toledo. That's something, huh?
Yeah, yeah, and I remember prior to starting my day, I would dial in and check my what was then known as electronic mail. Nobody called it email then. And I remember a very senior banker came up to me and was like, "Hey, people in the office are saying you use this World Wide Web thing," and that's what we called, the internet
Yeah,
back then. And I said, "Yeah," and I plugged it in, and the old-fashioned remember that sound,
I
Marty? And,
do. I
and
do.
next thing I knew, I had very senior members of the telecom group around my cube, just trying to figure out how this thing works. It's like, hey, you seem to know a lot about this. Let's staff you on this deal. Let's staff you on that deal. And media and telecom and technology really, it really, I really gravitated to those industries because there were such they were so important in connecting people, not just your neighbors, but now countries. 15, 20 years ago, if you wanted to know, the best restaurants in Mumbai, right? It was very hard. You had to go to a bookstore. You had to
Yeah,
figure out whether somebody has ever written a book on restaurants in Mumbai. Now you can just go to this thing called
yeah.
Google, type in great restaurants in
And
Mumbai,
and you're
and you
you're
would
you're
get extensive
skipping the Alta Vista,
reviews.
Yahoo, and all the rest of those guys' phase, but absolutely, absolutely.
Absolutely. No, before Google, there was Yahoo. Before Yahoo, there was something called
Dave, let's
CompuServe, and I still refer to AOL as America
there you go.
Online because that.
That's very funny. Let's talk for a moment about let's project forward. So we've talked a little bit
Sure.
about the history of telecom and all that, and technology is something that's near and dear to my heart. Talk to me about where you think the industry is going. We're now, middle of 2024, obviously between cell and various different compute technologies, the data centers, there's energy that's now involved with all of that. And so much of us are dependent on the technology, not to mention all the security that goes in. Like, where do
Yeah.
you think the whole industry is going? What will be the kinds of companies that will be leaders? If I was an entrepreneur today, tomorrow, what should I think about going into? Where are you, as a seasoned investor, looking to find the next set of winners?
So, if you go back 50 years and you look at the big technological advancements that had an impact on society, VCRs, home computers, the internet, the phone, all played, mobile phones, all played a really big part in our society, in our businesses, in our daily lives, in connecting people. I remember in the late 70s, in the early 70s, when my parents wanted to call my grandparents in India, you actually had to make an appointment with the phone
Did you
company.
really?
And yes, and you can only have these phone calls in the middle of the night because on the other side of the world, that's when they were up.
Mm,
And I remember, my parents putting on the alarm clock, getting up at 3:30 in the morning because my mother wanted to talk to her dad, my grandfather. Now, you can take this phone and call anyone in the world on WhatsApp and not really worry about the fees or anything.
yeah.
So, technology, as I said, Morty, plays a really, really big part. But if you're looking to the future, where's the money going? It's AI, it's artificial intelligence. And I have been spending a lot of time not just learning the technology, but how that technology could be used in day-to-day life of portfolio companies within TMT, within light manufacturing, within business and marketing services. And it's very exciting, but it's also very scary at
Mm,
the same time. And I think, if we codify it in the right way, it can be that next step in society when 50 years from now somebody looks back and says, yeah, VCR, mobile phones, handheld desktop computers, AI is certainly going to be very, very big.
yeah.
But I think we need to be
It's
careful
absolutely true, and
about
I'll
how
tell
we.
you that within the KJ space, my technology company, we spend a lot of time helping our clients think about how to prepare for the AI revolution. So this is in terms of data tagging, making sure that your permissions are set up right. If you don't take the time to educate your users to not put proprietary information into public, let's call them AIs for lack of a better term,
Yeah.
multiple kinds, but for that, then you risk potentially losing your data or at least control of your data. It's proprietary, and I would imagine that as an investor, that would be important to you. So while at the same time, I can think a little bit about how I am going to make this work great, and I can save myself a lot of time. Will I really want to put that company X is thinking about buying company Y or investing in company Y? And even can I do that? What do you think about that?
Exactly. Yeah. I'm looking at a media company right now that publishes information to a collector audience, and you're sitting there thinking, God, why do you need writers? You can just have AI put an article together on, I'll make it up, stamp
Sure.
collecting or coin collecting, and uh, sometimes the data that they like ChatGPT uses, you kind of wonder where they come from, how they got there. Are you going to get in trouble for using that? So we're still approaching this with an abundance of caution, but lots of optimism. I mean, thinking about very simple. Uh, there's an AI company out there that does presentations for the investment banking community. Now, I can tell you, Morty, when I was a junior banker, I was up all night putting together these
Sure.
presentations and PowerPoint. Now you can go to a machine and say, okay, give me a 20-page presentation, include valuation discussion, include credentials, include an introduction, and you get this great looking pitch book that you
So
can
what's
give
the
to a client.
value of the human in that scenario?
So you still need people to to do things. You still need that knowledge base. You still need to make judgment calls. These are things that I don't think AI can do yet. There's also this level of comfort, Morty, when, like, for example, IT. When one of your clients calls you and says, "Hey, Morty, and I have a problem with my machine," uh, you know how to address it. You know the pain points because you've dealt with that person. I'm not sure AI can do that yet, and I'm not sure the human spirit can totally 100% be based on technology. Even if you
Hmm.
take a look at Instagram, Facebook, and you see all these pictures. Somebody had to put that together. Somebody had to take a picture. Somebody had to go someplace. Even something as simple as restaurant critiques. You still have to go someplace. You still have to talk to a waiter or waitress. You still have to travel to that place. That's not something I think AI can replicate. And even if we look at technologies, people said, well, the VCR is going to kill the movie industry. No, it didn't. Okay, it's just how we uh, uh, view
Yeah. Now
entertainment
it's what?
has
How
changed.
much more content is there now than when you and I were kids? Quadruple, quintuple,
Exactly,
more?
exactly,
Yeah.
exactly.
You
And
can consume
technology,
it any which way
I
you'd
think,
like. You can consume it
mhm,
anytime you'd like. You can consume it with lots of speed and certainly on the go, and it's remarkable.
exactly. So I think it'll change the way we do things in society, but I don't think it'll eliminate the human
So let's
contact
just
loop.
talk about the kinds of specialties within the AI world. And in your
Sure.
mind, are there any differences between, say, those, what we now call AI, and maybe a year or two ago we would call them algorithms, or we would call them something else
Mm.
that was roughly the same, that was a specialized process for a particular industry? I mean, before you said, write me a pitch book and a deck, and you named a number of specific categories for the AI to write.
Mm.
So perhaps it's able to assemble this better. Like, what processes are able to be done today better, and B, where is the advantage to the for a normal person who's trying to just get their work done a little bit better and not sleep in the office every night for the entire 20s?
Yeah, I think AI will uh, any process that is repetitive and boring. Okay, AI is certainly, I think, going to come and
Okay.
replace. So that's why it's important for us as a society to upgrade our technical skills, because just because you suddenly don't need somebody to do one particular area, well, guess what? Those resources go to another particular area. Okay. They say, well, technology is going to replace people. It didn't replace people. It just took them out of one industry and put them in another industry. In the early 80s, if you told people, I'm going to move to California and join a computer company, they were like, huh? Why would you do that? But, that it took a lot of people from one particular area and put them in another particular area. So, Morty, I think what's necessary from a philosophical standpoint is, you know, push your kids into more technical areas for them to have a much more, I think, a stable
Yeah.
work life. Because I think some of the basic things that we take granted for now will be replaced by AI. Very case in point, you have a problem with your credit card company. People don't realize that the first, 10 minutes of somebody that you're talking to via chat is an AI bot. Okay. And by the time you talk to a human person, uh, you now have somebody who can focus on your problem and solving it within a very short period of time. Now,
Meaning
does
from a
this mean
gathering
that
information perspective, or because they've already solved the 80% of the easy problems that a bot can actually solve through a repetitive process?
exactly,
Both.
exact,
It's
exactly,
both.
both?
Okay.
So, yeah, I'll give you an example. My on my credit card, I was supposed to get a credit, and I asked the bot, which introduced me as a person, and said, "Oh, by the way, whatever happened to this credit?" Next thing I knew, because the credit was applied on this particular day, this particular time, it will be reflected on your next statement. Now, that means you don't necessarily have to talk to somebody.
For that kind of
Okay.
question, for sure not.
And
Why would you even want to?
yeah, and I think it's going to get a lot more sophisticated. And customer service centers, in this country, nobody really grows up saying, "Hey, I want to be a customer service person." All right, it's typically a job that you take, uh, when you're in between jobs or you're looking to supplement your income. And I think, as our society progresses, these types of jobs are not going to disappear, are just going to be taken out of one industry and put in another industry. You know, I mean, Morty, when we were all kids, we all did a obligatory summer at McDonald's or Burger King. But now, there's McDonald's that is on Park and 29th Street in the city. You put in your order through a machine, and then you go pick it up from this one person that's responsible for making sure that it comes out of the back to the front. Now, 5 years ago, when my previous firm, we used to go there occasionally for that 3 p.m. obligatory,
Nice.
snack, and you would stand online and we'd have to order something. Now, does this mean that those jobs disappeared? But those people definitely found jobs in other
Right.
industries. So, I think it's what AI can do just going forward. I think it's going to be a tremendous drive for our society, but we have to be careful. We have to make sure
Malcolm
we have.
Gladwell always talks about the confluence of technologies. And I think in one of the articles, I forget which, he spoke about the Apple Newton, where it was a brilliant technological advance, and yet it didn't take off because even though it was beautiful, it had no way of getting data onto it. It had no way of communicating. So I think they spoke about the idea was they would give it to pilots, and the 7,000 page manual that airline pilots are supposed to take with them and is supposed to be updated regularly. They were going to put on this Apple Newton. And it's a great idea and concept,
Mm,
but no one invented a PDF yet. So you couldn't get that document in a digital format in the first place. Scanning it in
mm,
would take forever. It would have to be updated regularly. You couldn't do that because this was, some other file formats that were not easily updatable. Publishing these happened infrequently for that exact reason. And not only that, there was no way to move the data onto the device. So in today's day and age, where not only do you have Wi-Fi, but you also have cellular connectivity, the devices themselves have shrunk, have a ridiculous amount of memory. We have the file format technology. So a lot of these things came together around the second time around with the iPad, iPhone revolution, if you will. Um, and I wonder what's going to be the next set of confluences. So, for example, what you just said before about the people who are working at McDonald's. So, if you're talking about, say, a cashier, right? So maybe you don't need as many cashiers because you can place your order either at the kiosk in the store or on a web app.
mm,
And really, somebody just needs to be quality control. It's not the person who's making change in the same sense. So, there's an entire
mhm.
class of workers that now need to be retooled. Uh,
Agreed.
it's
Agreed.
just it's an interesting way of thinking about the entry level position and how young people are going to learn how to be useful in tomorrow's economy.
Yeah. I said, going back and looking back, I have a number of family members, and I was asking, what is the most important class you took in college? And uh, uh, the family members who had technical degrees said coding.
Yeah.
Okay, and I fully agree with them. And I think it's going to affect and permeate through all aspects of our life. So AI is very exciting, Morty, and be interesting where it
So
takes us.
David, from an investment perspective, AI is clearly one area of focus. What other areas do you think, as an entrepreneur and or investor, would you consider to be, either disruptive or certainly attractive?
I think media uh, will be disruptive and also very attractive. There's uh, uh, I think there's a really good recurring revenue theme that is very attractive to private equity investors. There's the advertising portion, there's the subscription portion, and they also, a lot of media companies don't necessarily have to spend a lot of money in generating content because there are people out there that will contribute content, right? I mean, take a look at Facebook. They have no content providers, but yet they're the biggest content provider in the world because people love to upload things and videos, photos. So media is, and media also has a very significant influence on our society, and it's certainly not going to go away. And I think it'll continue to be very disruptive. Uh, it just really comes down to having quality content and user generated content.
Mm.
But I think in the niche areas, you'd be surprised, Morty, if there's an interest that you have, no matter how out there is. There is a website, there are publications out there, events that track that
Mm.
interest. So I've been very successful in the trade show, digital products, as well as I still use the term print magazines, but really print magazines who went online. Again, the concept of reading has not changed. Advertisers have not changed. The subscriptions have not changed. The only thing is they go online versus waiting for their
But
magazine to
also,
come
it
to them.
sounds like what you're saying is micro segmentation. So you're saying that if I was interested in magic tricks that could be performed on shoelaces, for example, or I don't know, something else that would be equally bizarre, I'd be able to find a micro segment that would work.
Oh, absolutely. When I got into private equity, one of the areas my bosses asked me to look into was niche sports. Okay, so it was paintball, it was knife collection, gun collection, it was uh, uh, cars. But one area they put down was dog sledding.
Dog
Okay,
sledding.
now
So is
yes,
this where
yes.
the
So
dogs race the sled or the dogs are on the Okay.
exactly,
Yeah, no, just
no, no,
making
the
sure I
dogs
understood
race.
what you meant.
Yeah, right. And as a New Yorker, that's a concept that's a
Foreign?
little, not yeah, very foreign to me. So I did my research and found out there were more than 25 magazines dedicated to the sport
No
of dog
kidding.
sledding. Okay,
They
yeah,
publish in Florida,
and
right?
yeah, but and there were, you know, they were, and they had associated websites. They had events, in-person events, really centered around this. It just totally blew my mind, and realized that niche media is a really great area to be in.
Fascinating.
Because when we think about media, yeah, when we think about media, Morty, we tend to think about the big companies, right? And they're mass media, and they need eyeballs. They need eyeballs. With niche media, they have consistent eyeballs that grows, grows according to the economy. But they also have a very loyal subscription base and a very loyal advertising base, both endemic and
Right.
non-endemic advertising. So I think that's a great
So
area to go to.
in my term, it would be something like a raving fan.
Exactly.
Interesting.
Exactly.
So so you interesting. So for young people to think a little bit more about what it is that they find really interesting and then to look to potentially to make a career out of some of the more interesting things that they do and make them unique.
Yeah, I mean, even if you look at influencers and what they influence, really focused on a few areas, no matter how niche it is, some of them have great careers. They've generated some significant wealth for themselves. I always say most successful life is not a life where you made a lot of money. It's a life where you pursued your
Mm.
passions, because that's what gets you up in the morning and you pursue your passions. I always find that all this, the economic gains follows
Dan
that.
Sullivan of Strategic Coach speaks about something called unique ability. think you may have even trademarked the term, but that's fairly self explanatory and it sounds exactly like what you're saying.
Exactly. Yeah, I always tell young kids who want to come to Wall Street, don't do it for the money. If you do it for the money, you're going to be extremely
Right.
unhappy. I did it because I had a passion for how capital came to businesses. I had a passion to how businesses ran, and I still enjoy it. And even till this day, I can talk to you hours about what I do because I have a great
It sounds
passion.
like you're infinitely
And
curious about financial markets.
you have to be. You have to be because I think history repeats itself. But then technology has played a very big part in finance. Uh, Again, Marty, going back to the early '90s, you wanted to buy 100 shares of Microsoft, you had to pick up the phone, you have to call a broker, you had to talk to somebody on the other side. Now you can just pick up your phone and on your way to get a cup of coffee you can put in a limit order and wait for it to be executed, and you can do it for cents on the share versus back then it was a significant amount of
I
money.
was one of those guys. I was training to be a broker. Turned out that I preferred technology. Go figure, right?
It-
Okay, so let's say that you're investing in a company. Most likely, in many of these
Mm,
cases, you may have some young staff and young talent that need some nurturing.
mm.
Maybe you could share a couple of stories about how, from the private equity side, you were able to offer expertise and guidance to the people so that they can grow their business more effectively, lead their talent more
yeah
intelligently.
I think the first thing is organization and putting in structure. Typically the companies that we invest in, they have some infrastructure, but not a lot. These aren't startup companies. These aren't, the five kids out of Stanford who has a great idea. These are typically, I would say, family-run businesses or entrepreneur-found businesses that are dealing with their first round of institution. And one of the first things that we always do is bring in some structure and some
Okay.
discipline. So, what does that mean? First, we have a board of directors. Okay. And when you are an entrepreneur or you're a family run business, you didn't report to a board. You didn't report to somebody who is looking at the business from outside inside. And that is a pretty hard transition to do initially. And pre-close, we spend a lot of time making sure that those lessons are instilled in management. That there's a board that you report to. That board is somebody that you work with in developing the strategy and the direction, but it's up to you, the management team, to execute on that.
And a certain amount of
And then at the same
accountability, I would
time,
imagine as well.
agree. And I tell people, well, you think you're reporting to me? Well, no, you're actually reporting to people who provided capital to you, whether it's our equity investors or the
Mhm.
banks. I'm just in the middle to make sure to keep both
Right.
sides happy. So that is key. And then putting in structure. So, if you look at small companies, they typically didn't have much structure in terms of weekly meetings, what type of information they should share, and as well as making sure that, hey, we need to send the board a monthly board package. And in there, we have financials, we have a balance sheet, we have working capital statistics, we have a pipeline report, and maybe some verbiage as to how the month did and what we could do to be even better. Because from that perspective, I look at, okay, where are we strong and where are we weak? Because if we're strong in a particular area, we don't necessarily have to focus a lot of our time on it. But the areas that we're weak, we have to make it stronger in order to grow the enterprise. And we'll find out, hey, it'll be great if we can offer this particular service, because if we could offer this particular service or product, we could have won that business. So what can we do to get that? Can we build it organically using the resources that we have, or do we have to look outside of the company and say, oh, you know what, you have a really great product or service, join us by letting us acquire you and invest in you. You can be part of a larger organization, At the same time, we can achieve our goals in now achieving offering a new product or service. So, we it's called a simple buy and build, and we had a lot of success in that. And my previous portfolio company, we were great at manufacturing what was then called trade show booths, but they needed some investment in strategy and creative. And we ended up acquiring and investing in firms that offered those services. And the company went from being a nice small mom and pop shop to, being one of the largest experiential marketing providers in the United
So,
States.
so
And that was,
basically, understanding that you need the structure, you need to be able
yes,
to report on what you're doing. So there's a lot of accountability there. And you need to be able to
exactly,
understand that the people who are funding you are also the ones who are ultimately going to demand the results.
exactly,
Speaking
exactly.
of funding, what do you think about what's going on with interest rates? I understand, and again, I'm a technologist, not a financial
Yeah.
expert, but I understand that PE firms traditionally use limited partner capital as well as borrowed capital. A, how does that work? B, how does that impact
Sure.
your industry? And C, how does that work for you?
So the two types of capital that we use to fund our investments uh, is one is equity capital, which we raise from what you appropriately call limited partners. Those limited partners can be anyone from somebody writing a $250,000 check out of their savings account to large pension funds, endowments, and charities that are looking to supplement their income and their
Mhm.
investment portfolio. And then we go to banks to borrow money in the form of debt, or we go to what we call mezzanine finance, which is the second layer in debt that is behind bank debt, and borrow money from them. And we try to get an optimal capital structure where we can generate a good return for investors while also protecting investors' capital, which is the equity providers. So uh, so we raise money from both areas, and both areas have to have both players have to have a significant amount of confidence in your ability to grow the company, and so a track record is very important. But also selling a very positive vision for the company is also key, and making sure that the management team knows that they have to when you invest in a company, they expect to get a return.
Sure.
And yep, and that's and when when a bank lends you money, they expect to get paid back. So cost of capital is something that's always top of our mind. We went through an inflationary period where rates were raised. Now they're talking about cutting it because they're probably see the Federal Reserve Bank is probably seeing a lot of data going forward where the economy is going to slow. So let's not raise the
Uh,
rates. Let's not raise the, which is so interesting, Morty, because when my dad bought the house that I grew up in, he paid upper teens, and I remember him bragging about it to his friends because a lot of them paid something that started with a two. I think we had an entire generation that didn't, understand history of interest rates. But having said that, cost of capital is always
mhm.
important, and we look at it very, very closely. So we look at structures where we could minimize the cost of capital as well as minimize
So,
the risk.
so at least
Yeah.
until interest rates come down a little bit, in which it sounds like what you're suggesting may happen. Um, if I was an investor and I was investing in a PE type of thing, I would probably be more interested in using, my readily available cash rather than trying to lever the deal. Is that what you're saying?
Well, so private equity has always used leverage. That's part of the model, whether it's good times or bad times. And obviously, we try to minimize the amount of leverage because that minimizes the risk going into to an
Uh,
investment. Last year was a year that probably wasn't the best activity for private equity, only because you had rates going up and investors weren't getting a lot of exits, meaning a lot of capital that would come back from it. So it provided a little bit of a challenge. I remember talking to an investor in early January, and I said, "Hey, you're a fund investor. Why would you talk to me?" And he said, "Well, you did something not a lot of you guys did in 2023. You sent a lot of money back, okay, and that's key, okay. That was very key. So, there was a lot of caution last year in putting money in private equity deals, as as evidenced by the lack of, I wouldn't say lack of exit, but the slow amount of exits and the low amount of new
Mm,
platforms. But now that we have some direction on interest rates, which means we have direction on cost of capital, I suspect that while still being cautious, there will be more platform investment activity.
very cool, very cool. So if if you're looking at the world, and obviously, the in the news, what you hear about are the, super attractive young companies that are dynamic, that are growing like crazy, and then you're rolling a bunch of them into one, and and then growing through acquisition or even internal growth and acquisition. Are there any situations where you would look at, say, an older brand that for whatever reason got a little tired, and maybe with your expertise and help can find a whole new direction and or meaning?
Yeah, I think a number of companies out there is just not taking advantage of what technology offers, both on the sales and trading side. I'm sorry, the sales and marketing side, customer service side, even something as simple as, I was talking to a manufacturing company, and I visited their warehouse, and I said, "So, how do you know that you have this part in stock?" And the guy's like, "Oh, it's simple. I just walk up and down the aisles and I look up on
Super
the
simple.
shelf." And I'm like, "Yeah." And I'm like, "Well, what if you are on the customer premise? Don't you have like an iPad that you can look into?" And like, "Well, no, I just call somebody back in the office and say, 'Hey, do we have part XYZ on the shelf?'" I'm like, "Well, wouldn't it be easier if you had that technology to kind of track that?" And So I think there are a lot of companies out there that are old and staid. I'm not just talking about branding. I'm just talking about just even
Hmm.
process. Okay. And I remember I looked at an HVAC installation company not that far from here, and I said, "So walk me through your pipeline." And he literally took out an old-fashioned notebook that we used in elementary school and started flipping through it. And I'm like, "Well, why didn't you electronicize it?" And I'm like, "Well," and he's like, "Well, why do I need it?" It's like, it's a few sheets of paper. But I'm like, "Yeah, but you can also derive conclusions from just looking at vast amounts of data." Okay. And these companies have a lot of not just structured data, but also unstructured data. And if you can draw conclusions about them, whether it's an internal issue or something about customers, then you can kind of figure out, okay, this is what the customer needs because we can derive it from our own data. This will help grow the enterprise going forward. So
This is
I think there are
exactly
a
the
lot.
LLM
I mean,
thing you were talking about before, meaning if you take all the unstructured data and allow an internal AI to be able to build on that information, that goes exactly to what you're talking about.
yeah, and Modi, the thing is, when you learn something in a particular way, you're so used to it that things don't change. Okay. And as a private equity investor, the investors look at me to make sure that you create that value. I'm incentivized to do that through returns and fundraising. So I have to make sure that you bring that discipline to the portfolio companies that you look at. And you'd be very surprised. There are so many small businesses out there that we all think that everybody has a Facebook page and everybody has a Twitter account. Uh, but digital technology is way bigger than that. It can apply to a broad range of areas within a company, no matter how old economy It is in finance, in inventory management, in reaching out for payments to customers, even responding to employee issues within a company. You'd be surprised how technology can help them, but they haven't necessarily
Are
used
you
that. So I
seeing
think
are you
private
seeing
equity
any
is
I'm
very
sorry, are
big.
you seeing any companies using blockchain
Okay.
to solve the problems you listed? Or not
Um,
really?
Not y- not yet. I think what happens with technological adaptation, it happens at the bigger companies before the small companies do it. So I think what happened, blockchain. Listen, we all have our views on crypto, but I think blockchain uh, does have a very big place, a very big role to play in, particularly in finance and accounting. Okay, in any type of area where you need to store data.
Hmm.
Okay,
Custody, inventory,
but
there should be, in theory, a lot of room for very innovative areas for improving upon how we track what is what. Sorry, didn't mean.
agreed. Agreed. But what I found with small companies, they're not necessarily technological leaders. They're not the first adapters. But as a private equity firm, you have to constantly upgrade your skills because you need to bring that level of skills to the portfolio companies. And by doing these minor little tweaks, and you do this throughout the life of your investment, you will find that when you exit out of that investment, you've earned a better return than what you would have if you've done nothing.
So small incremental changes, as a general rule, tend to compound both in interest as well in
They go
process.
a long way. They go a long way. Something as very simple as my previous portfolio company, they had a website like everyone else. They had to contact us like everyone else, but they did something, and we talked about this at the board level, where you had a chat AI bot saying, "Hey, can we help you? What do you want to see?" And the number of inbound inquiries from people who eventually became customers translated into a significant return on the investment, as well as generated millions of dollars
No
for the
kidding.
company.
Wow.
And it was as simple as this chat,
Mhm.
right? And it, I wish it would complete the trade, but it actually would allocate the questions to the individual who had expertise in that area,
Ah.
and then the that person took the idea and the conversation and eventually turned it into a close
Either
sale.
way, it's removing friction from the process.
Exactly.
Interesting. Very interesting. So, look, obviously, in any transaction, there's got to be a tremendous amount of stress. Like, what needs to
Mhm.
happen on either the buy or the sell side during those first few days, maybe 100 days? Like, what should be top of mind for the operators as well as the investors?
uh, First and foremost is making sure both sides are comfortable with each other. Okay. There are many times when I've attended a management presentation, I'm like, okay, I've met five executives. Four of them are really don't have the passion to want to sell the company, but the owner does. That is a recipe for
Mm,
disaster. So they always say, the first meeting, I always try to make it a two-way street because it's very, very common for these management presentations, Morty, when somebody just keeps asking you questions and you answer them. I want them to ask me as many questions I ask them. I, I I like to pride myself as management presentations being really a two-way street because this isn't just a transaction, Morty. I'm raising capital from investors to invest in. In addition to that, we're going to be working together for the next 5 years or so, which is a typical hold in private equity. And uh, I need to make sure that all of you are on the same page. You bring your A game. Making sure that they're comfortable with what we do, and how we do it. And I'll give you a quote of an investment banker that gave me for my last management presentation, which was a few weeks ago. He says, David, you presented as much as they presented to you. And I remember showing up with a pitch book of what my investment criteria is, what case studies we've done, telling them, hey, if you have a question about me, call this investor at this fund, or call this executive at this former portfolio company. I think that's key. And if you're an operator looking to get money, capital is a commodity, Morty. Okay, your dollar and my dollar is the same thing, but the difference is what we can do with that. Do we have the expertise in the industry? Do we have the resources? Do we have the ability to change the path without going off without driving off a cliff, so to speak. Okay, people love change. People sometimes don't like change, and some people try to do way too many things all at the same time, and that's just a recipe for disaster. And having that outside discipline can be helpful. So if you're an operator looking to raise capital and you're taking investor capital, before you look at the capital, you have to say to yourself, is this investor the right person for me? Okay. And, I met a retail company, a CEO of a retail company. We really hit it off. He called me up and said, hey, I think you could be a great investor for us. I turned back and said, I've never done a retail deal in my life. I don't know what I could do to help you. I mean, yes, we had a good time over a glass of wine in an airport lounge, but remember, this is, we're going to have to deal with the ups and downs of the relationship. And I said, you know what? I'm not the logical person for you, but talk to these four funds. I know them very well, and they love to invest in retail, and they're much more logical for you than I. So always, before you get the pitch book out, before you open up the data room, do your due diligence on investors. Are they logical for me? Okay. And could they bring something to the table that another investor with the same amount of money cannot? And if you're finding yourselves checking a lot of these check boxes, you found the right
So
person.
dollars are our commodity, and everything that you would otherwise consider as the intangibles are really the value add to the transaction.
Agreed. In private equity, there's about, depending upon who you believe, about $3 to $4 trillion of what we like to call capital that's waiting to be put to work, okay, or dry powder, as the slang is. That's a lot of money, okay?
Yeah,
And
$1 or $2 trillion before you know it, it's real money.
yeah, but one of my first bids I did as a company, as my own firm, was a company that manufactured car vacs and car finishing products. And one of my investors owns north of 100 retail stores for auto products. And I wasn't the highest bidder, but I was probably the most attractive bidder. And part of it was because I had the right capital. It wasn't that I had, the highest amount of capital, but I had the right capital. This enabled the company to get into stores very quickly, because guess what? One of the investors in this company also owned 100 auto part retail stores throughout that part of America.
It
That
makes it
makes
the
it the
right
right,
fit, exactly.
the right fit. I wasn't the highest bidder, but I was probably the better investor. Unfortunately, there were some due diligence issues that I could not move forward and risk my investors'
Yeah,
capital.
well, it still
But
needs to work, right?
uh,
But the
exactly,
strategic fit
exactly,
probably makes more sense if you can make the deal to work and all things are equal.
exactly. So because I don't have a fund, I don't have a fund structure or an expiration date. I have the ability to hold on longer than most fund structures do. My previous portfolio company was a little more than 9 years before we exited, because it's hard to grow a company in 3 years and exit. with certain investors, and certain investors will say, you know what, we can give it a little more time because we have the experience of taking our own time and growing our own businesses where our wealth came from, and we understand that it's usually more than a 3-year period.
Yeah.
So uh, dealing who your investor is probably much more important than the
Yeah.
actual
And I
money.
guess anybody who's getting into the relationship needs to understand where everything is coming from and going to. David, thank you so much. We could probably stay here and talk for hours. Thank you so much to my guest, David Acharya of Acharya Capital Partners. We absolutely had a marvelous time.
Marty, it was absolutely my pleasure. Thank you so much for
Thank
inviting
you.
me. Look forward to look forward to meeting you in
Absolutely. We're going
person.
to definitely do coffee in the city one of these days, hopefully very, very soon. And I just want to close by saying that Ventures and Visionaries is sponsored by KJ Technology. KJ Technology provides advisory and cybersecurity process consulting services. KJ also provides full managed IT services. Please feel free to reach out to us if you have any questions. Once again, David, thank you so much for your time. Your insights were invaluable. We look forward to continuing this conversation. And anybody who's hopefully learned a little bit about investing from David, feel free to reach out to David. And we look forward to continuing the dialogue.